Welcome back. Well, it's a slightly quiet morning across Asia. Markets are cooling off after what's been a very, very strong week for some of the regional indices, particularly, of course, the Japanese market. There you see. But Taiwan's now flipped into the positive side. Oh, by the way, that's an interesting update on DLF also coming in. Remember, this is their maiden project in Mumbai West Park, and apparently the first phase is completely sold out. So, yeah, sales already 2,300 crores already going to be booking in that amount from the Mumbai project. Of course, one luxury project. It's in Andheri in the city. Anyway, let's talk more stocks and get our team going. Our list of top stocks to watch this Friday morning. Guys, morning to all of you and happy Friday. Well, let's start with Bajaj Finance. Gaurav, first of all, will it be happy or not, given the slight increase in credit cost?
Well, yes, when we look at the numbers, they actually look good because profit has increased almost by 22%. Even it delivered 25% AUM growth. But what remained some negative is that the commentary on credit cost. What has happened is that the credit cost has remained at around 2%. So let's understand the numbers around that. Gross NPAs and net NPAs, they have increased almost by 75 basis points. As a result, when we look at credit cost, that has remained to around 2% on a sequential basis. What management commentary suggests is that the stress is specifically coming up from 2 and 3-wheeler segment and also from the MSME segment. Now, what they're saying is that going ahead, there will be some slowdown in these segments. They believe that at least for the first half, the stress will remain. And when we look at the other commentary, although they have maintained their credit cost guidance around 185 to 195 basis point, it may be taken in a negative way because the credit cost has still remained elevated. Other than that, when we look at brokerages, there also we did not see a big cheer for Bajaj Finance. In fact, JM Financial, they have maintained their target at 1,000 rupees. What they say is that the near-term concerns around the growth and asset quality will keep the stock actually in line and also range bound. On the other hand, we also have JP Morgan who downgraded the stock to neutral. We have UBS who still maintains its sell rating at a target price of 750. Macquarie also maintained its target price of 800. So definitely not a big push that we saw from brokerages as well on Bajaj Finance this quarter.
Well, it's a Friday. Surbhi said they're looking happy. Just look at the faces. All of them. I think Sonal is the happiest.
These are earnings faces, I can see. This is earnings season faces.
Earnings season, any weekend is like a big relief. I think I've seen around 60 earnings seasons here at CNBC-TV18. What a relief. All these guys are going to be enjoying this evening. But Gaurav, coming back to you, you have had a very, very hard week. REC, those numbers look good.
Well, as REC, actually numbers look good, and the reason being, on the flip side, we could say actually the credit cost was something which actually pushed the profit for REC. So let's understand the numbers first. Net interest income increased almost by 17%. It was in line with the street's expectation, which is the operating profit that actually increased just by 4.8%. There was a little bit of disappointment because of the loss on fair value, which actually dragged down the operating profit. But on the other hand, credit cost, now company has reported negative credit cost for the quarter of around 670 crores. This was led by one of the MP accounts of TRN Energy, where we saw a resolution happening, and as a result 270 crores of provision was brought back. On the other hand, this actually pushed the profit up almost by 29% on a year-on-year basis. Let's also not forget that net interest margins also improved on a sequential basis. On the loan book front also, when we look at disbursements, that remained very strong at around 32%. But the loan book growth number actually came at around 10.4%. It was a little lower than their own guidance of around 12% growth for the year. But definitely, I think the street is going to take credit costs in a positive way because the gross and net NPAs have also fallen down. So that was actually something positive for REC in this quarter.
Yeah, no, absolutely. More financials a little later. Thanks very much, Gaurav, for that. Keep an eye on those names, Bajaj Finance in particular. IEX is the big one, right? I mean, sold off big time. News, of course, is now well known. Vivek, tell us more. Did you, by the way, see how much of the equity got changed hands yesterday? I think it's a substantial, over 10%, Vivek?
Absolutely right. Large portion of the equity got changed. The other thing is, while we will be discussing the operational update or the Q1 numbers, more importantly, all eyes will be on what is the way forward, what is the strategic roadmap that the company lays, in the fact that how are they going to go and deal with the implementation of market coupling. So all eyes will be on the management when they join us at 10 a.m. today. Now, looking at Q1 FY26 results itself, largely in line, a very steady set of numbers. Remember, volumes were up almost 15% on a year-on-year basis in the key markets. So on the back of that, revenues higher by 14.7%, the EBITDA up 16.1%, margins, up 100 basis points, and profitability up 25%. Now, there's one sentence that the management has given in the press release. They're saying that the company is currently undertaking a detailed impact assessment of the implications of the regulatory change, that is market coupling, and will keep the stakeholders informed of any further developments. Now, the important part is, what is the company said? The collectives, which is the day-ahead market, RTM market, and the green day-ahead market, actually constitute close to 75% of the volumes which will be impacted by market coupling. So all eyes on the management, and we'll also need to see whether they have anything in the arsenal to go ahead and challenge this particular order.
Got it. Okay, all right. Thanks a lot for that, Vivek. Let's go to Rima, Hexaware, and Mphasis. Rima, how are those numbers?
Well, Hexaware was softer than expectations. The company's top line grew by 1.3%, lower than the CNBC-TV18 poll of 2.5%. The way we calculate margins have come off sharply to 12.4%. And there's this big increase in the other expenses, which is to do with provisions, impairments for select customers, etc. But the way the company calculates it, and they've given adjusted margins, that has gone up to 18.1% versus 17.1%. But there is this big jump in the other expenses, which is hurting the company. Also, from the press conference, while they haven't given a quantitative number for the guidance, just the body language seems to be that they've toned down their expectations for growth this year. So last time, they just sounded a lot more positive. I remember they said Q2 is going to be a good quarter, Q3 is going to be a great quarter. Right now, all they're saying is that we see continued softness in the macro. The slowdown is cyclical in nature and not AI-driven. Margin guidance remains unchanged at 17.1 to 17.4%. Now, for Mphasis, on the other hand, revenues are a miss. It's okay, it's 1%, but lower than expectations. Margins are in line, but the deal wins are very strong. The company has reported the highest ever deal wins at $760 million. And even after this conversion, they say the pipeline is the strongest ever, and 68% of that is AI-driven.
Okay, all right, Rima, thank you very much for that. 9:30 a.m., you'll hear from the management of Hexaware, and they'll be with us a little later after that. We'll have the management of Mphasis join us as well to talk about their earnings. So that's the lineup which is coming up in a bit. Well, let's talk about Phoenix Mills next. Sonal is here with details. Sonal, good morning.
Good morning, Prashant. Well, this time around for Phoenix Mills, yes, there was growth, but it was a muted growth that we saw. Overall, revenues were up just 5%, EBITDA grew just 6%, margins were flat on a YY basis, profits were up 2%. While on the mall side, consumption was in double digits, up 12% to come in at 3,588 crore rupees. The retail EBITDA for the mall itself was just up 4%. And if we talk about the most famous and the highest consumed or the mall with the highest consumption, that is Phoenix Palladium, that's where the EBITDA was up just 2%. Their market city Bengaluru saw a decline of 10%. Market city Pune saw an uptick of just 3%. So overall, the EBITDA from malls or bigger malls was lower this time. In an additional news, the company has bought out 49% shareholding of Canada Pension Plan Investment Board. This is in their JV Island Star Mall Developers, and the aggregate consideration of around 5,500 crore rupees. This will be paid over 4 tranches, and the company will be funding it via a mix of buyback, capital reduction, and dividend payout.
Okay, all right, got that. Sonal, thank you for it. Let's go to Rima, a couple of Midcap IT earnings, and let's see, hopefully they'll be better than what we had yesterday, Rima.
Well, Cyient, perhaps not. The company's at a group level, the revenues are down 9%. Margins have come down sharply to 9.5%. Profits are down nearly 10% on a quarter-on-quarter basis. They've done a lot of restructuring. There is this key business DET that we capture. And there again, it's muted. Revenues are down 1.5%. Margins have come down to 12%. And the company says in the conference call that the environment is tough. One of the orders that they were expecting to close has been deferred. eClerx, on the other hand, was a fairly steady set of numbers. Revenue growth 3.3% quarter-on-quarter. Year-on-year, it's about a 16.5% growth. The company's EBIT margins have been largely maintained at 19.6%. So that's an okay set of numbers. Cyient is a bit muted.
Okay, all right. Thanks a lot for that, Rima. Well, hopping across to Vamakshi, who's been making a lot of slugs and putting a lot of data points together. Today, Kfin Tech is on your radar. Vama, take it away.
Well, absolutely, Nigel. It's a slight miss as far as the earnings are concerned. Revenue saw a downtick of almost 3% sequentially. Now, keep in mind that the street was anticipating the revenue to be flat, but that hasn't really transpired. Apart from that, the employee expenses for the company grew by 10% sequentially. This was partly offset by other expenses which dipped by 17% Q on Q, but that was not enough, and resultantly, the EBITDA margin came under pressure, down almost 170 basis points quarter on quarter, but it was slightly better than what the street was expecting. Resultantly, EBITDA came in at 114 crores. This is only a 1% miss as far as street expectations are concerned. The net profit, on the other hand, came in at 77 crores. This is a 9% sequential decline and came in nearly 2% below what the street was expecting. Now, let's look at what, how the segments performed. The domestic MF solutions business, which comprises of nearly 75% of the company's revenue, saw an uptick of 3%. Issuer solutions and international solutions, on the other hand, saw a dip on a quarter-on-quarter basis. And when you look at the margins, they've declined across the board, across domestic MF, issuer solution as well as international solutions. So therefore, slight miss, margin compression seen.
Okay, all right. Thanks very much, Vamakshi, for that. Sun Pharma is the next one we want to focus on. Vinny's got more details here. Vinny, good morning.
Hi, good morning. So keeping an eye out on Sun Pharma. Why? Because there's a settlement that has come in terms of one of the issues and litigations that were going on. Now, Sun Pharma and Taro have agreed to pay $200 million. This is to settle claims in the generic pharmaceutical pricing antitrust litigation. This litigation was going on for a while. Around since 2015, this pricing litigation is going on. Now, obviously, what it means for the company that they will be paying this $200 million. It's a one-time settlement that comes in. But obviously, the overhang of this is, now getting over. So that is why we're expecting positive coming in for Sun Pharma. They had cash flow of around $3.1 billion as on March 2025 as well. So no worries in terms of payment-wise as well. $3.1 million is what they were holding as of March 2025. And just in terms of an impact, analysts believe it's not going to be a material impact that is going to be coming in here. So keep an eye out on this one. Positive because the overhang of this litigation is finally ending.
Thanks a lot for that, Vinny. Well, let's do a quick recap of all the stocks we just covered. REC, Mphasis, eClerx, Sun Pharma. They'll react to positive news flow. On the other end, you have Bajaj Finance, IEX, Hexaware, Phoenix, Cyient and Kfin Technologies. They'll be reacting to negative news flow. We'll take that short break, come back. Sid Kemka of Motilal Oswal Financial Services is waiting for us for some fundamental talk. We'll also bring you excerpts from our exclusive conversation with Sid Swaminathan of Geo BlackRock Asset Management as it gets the SEBI nod to enter the Indian mutual fund industry.